Good morning, everyone. Welcome to the On Time, On Target Morning Brief, where we invest in fighter pilot precision on a daily basis. Thanks for the questions in the chat already about Luckin Coffee, because good news, that certainly is the topic of the day today. I've been a big fan of Luckin. I think now's the time where you have to move out of it. You may not move out of it completely. I didn't, but yesterday I made major moves, selling most of the position. I would say 90-some% of the position across the book. And basically, I kept a few just in case. But if you're keeping those shares, you got to realize this thing, once we go through what we're going to talk about today about the, SEC amendments, this thing could revisit $5. So I'm more inclined, I don't know, I need to make some hard decisions on the remaining shares I have today. I don't know yet. I want to do some more reading about these SEC amendments. And also DiDi is another one, DIDI, the ride sharing app ride sharing company through an app, obviously. They're facing, so there's another negative headline out today for unprecedented fines and penalties. So that's going to be pretty tough. But what we're going to do this morning, we're talking about the SEC regulations. It started back in 2020 when Senate passed a bill that would delist foreign companies that refused to give U.S. regulators access to their audits after 3 years. So that's kind of where this is coming from, and now it's starting to play out with the SEC amendments. And specific to Luckin, the case is on August. Thought I had it written down there. It is August 13th, which isn't that far away. It's going to be liquidation only events in the U.S. So when you're liquidation only, that means you can only sell all of it, not just some of it. You can only sell all of it at that point. So really, I think there's a lot of risk in being in these names, and China carries its risk anyway. Plus, most of us have some ridiculously low entry point. So the only reason not to sell here would be taxes. But if the thing could drop from 15 down to $5, I think you weighing your tax implication decision over your wanting to protect your capital, I think, is misguided. So that's what we're going to talk about today as far as Luckin Coffee. And we'll also have to talk about DiDi as well. I'll probably do DiDi as the topic tomorrow. We'll see. As far as the question of the day, we're talking, a lot of us got if you have children, you got the child tax credit in the mail. So I've gotten some questions in the past couple of days from the financial planning side of the house. Hey, what's the difference between a tax credit and tax deduction? We'll go to Investopedia for the question of the day after that and take a look. And Berner, I saw your question there in the Q&A. Yeah, we'll get to that once I pull up the chart as we get closer to the open for Luckin. I'll tell you what I'm thinking long term, but we need to look at the history of it first. And then we'll talk about, hey, where's it going to go in 3 months, 3 years, 3 decades kind of thing. And I'll give you my best take on it. All right. As far as the longs and the shorts, you see there's a couple longs in the room. Crocs is over 10% already. It already popped up, so it's probably gone. I do think today's market sells off. We had the big down day Monday, a couple of pretty big up days, and we have a huge negative jobs number this morning and some other negativity in the air. And so anyhow, my take on the day is this will be a down day, which will spike the VIX. VXX long is a potential day trade. On the short side, Netgear has already dropped out of our window. They're down, last I looked, at 14% and cratering. So we can't short them. Texas Instrument does fit our criteria, so that's one we'll be looking at on the short side. That's TXN. And then we'll pull up DiDi. We'll see. But so far, the news came out about Luckin a while ago, and it's only been powering higher. So once it got, touched 15 yesterday, I was kind of like, okay, uncle. So I moved out of it right around 1480 some. Everybody got a little different exit there because I did it manually. But because I wanted to keep some shares, but we'll see. I don't know. All right, that's what we're going to talk about today in the show. As far as if you're catching us on replay, make sure you subscribe, hit the notification bell, so you can get this live. And if you want to come in the room live every day, I'll answer your questions as they present themselves. And with that, let's go ahead and get started. All right, welcome back, everyone. Here's our lineup card for today. I did not actually update it, now that I think of it. Today, Thursday, July 22nd, day 4 from Anaheim. And we're make sure you have your Q&A window and chat window set up correctly. And make sure that standard disclaimer applies. It's a financial education presentation. You have to do your own due diligence for acting upon anything in this presentation. Full information is available at ototnow.com. All right, get this typed in here, deduction. There we go. We're going to be taking a look at LKNCY. All right, mission objectives for today. We're going to grow our money, protect our money, and live off our money. Specifically, we're talking about Luckin and what the long-term projection is. So we'll take a look at that chart when the point comes to it, and I'll give you my take and what I think I'm going to do after the market opens today. All right, the question today where I talked about tax credit versus tax deduction. After we get done with our day trading, I'll come back to that and make sure you're crystal clear with what's going on there. All right, our flow today will be long, short, open, short, long. We take a look at the overall market again. The futures were in the green earlier. The job numbers came out. Now they're in the red. We'll revisit that. Obviously, we'll take a look at the momentum going into the open, and then set up for our day trading stuff. However, I do think with your, the 5-day chart, big down Monday, up days on Tuesday and Wednesday, I think we're due for a breather, if you will. But that's just my take. No crystal ball. All right, we'll come back to the long term. I'll take a look at the headlines, come back to the long-term investments with Luckin. Execute the market open, contingencies and academic resources are standard. All right, let's go over to TD Ameritrade ThinkPipes platform and take a look, get rid of some screens on my little screen here. All right, that's how we're gonna be set up for the day trades. However, we're gonna have not Apple in there, but we're gonna have VXX. So you see it starting to pop up there as the market sells off. And then on the downside, we are going to have TXN. So it'll be SPY, and then we're going to have VXX and TXN as far as our what we're going to look at out there. All right, backing up to the long-term market, this is the long-term chart of the S&P 500. It's still pretty much a straight line higher. All the trend lines that are, again, artificially put on there are all up or flat or up, that sort of thing. And so again, we're still part of that reopening that started last April and continuing to earnings are rolling in. And if anything, when you look at the stocks that are selling off on earnings, it's really because they're guiding down. What does that mean? So remember, earnings is revenue, top line, profit, bottom line. Excuse me. Did we or did we not meet those projections? And then the last one is forward guidance. And again, a lot of companies are guiding down, not thinking they can't keep it the same trajectory that they're on. So anyhow, that's what's causing the stocks to get hit. So again, straight up, we've had a couple of good green days. I think we're back to instead of hitting new highs today, I think we're going to see some selling, but we'll see. Again, no crystal ball. All right, let's go on into the 5-day chart, which is here of the SPY. So you saw the big down day. This is Monday all the way down here, and then Tuesday, Wednesday, and then kind of we're going up higher. And then there's that red arrow right there. That's your jobs number. So again, a lot of people get up and trade pre-market off of that. I don't. I don't like it. I'd rather trade the open where you have the volume, and plus you can use market orders, not limit orders. But a lot of people will sit and trade the jobs numbers if you are a trading junkie, if you will. All right, let's go switch to the day trading chart. And again, this is how we're going to be set up with these 3 screens. All right, going back to going back to CNBC.com. Take a look at the futures here. Get to read these refreshed for you. All right, so we have the Dow down a little bit, the S&P down a little bit, and the NASDAQ ever so slightly up. So really that's pretty flat, if you will. We'll take a look around the world here. Europe mixed across the board. Asia up, Hong Kong up a lot. Bitcoin did bounce back again from the conference we talked about yesterday. That was one of the most popular videos was the silliness of talking about Bitcoin and stuff. Luckin is also a popular topic, so we'll see how it comes out today, even though it's going to mark the end of an era for Luckin, unfortunately. All right, bonds, the rates keep creeping up to 1.29. I think that'll get above 1.3 probably next week sometime, and that's fine. It should continue a little bit higher. Oil kind of stabilized in that 70 to 71 range. Gold and silver pretty much flat, and then there's your move up in Bitcoin based off of the conference yesterday. Moved up 5, 6, 7, 8% somewhere yesterday, and then up again, trending higher a little bit today. All right. Let's take a look. You see Kramer squawking about the futures losing steam because of the jobless claims. So let's talk about that first. See where the headline is. It was like 400,000. There it is. Well above expectations. Doesn't have the raw numbers in there. We expected somewhere around 300 jobless claims, and it really is up to 400. So it's pretty significant. The highest since last June or something like that was the number. So expect that to have a negative impact. Analyst calls, Tesla, Apple, Boeing, McDonald's, those were all going higher. Shout out to Facebook. Microsoft. I actually bought some Microsoft. I haven't bought a Microsoft in a long time. But they got hit pretty hard in that sell-off earlier in the week, so I've added Microsoft to a few portfolios. And then, if you've heard, they've kind of switched the acronym FANG, which was the old Facebook, Apple, Netflix, and Google, to FAME. So they threw an M in there, and because Microsoft has been so strong. So again, it was strong way back in the 80s, obviously 80s, 90s, and the big run up, but it's also strong again with everything they have going on out there. Subscription services, all that stuff is really pretty good. Upgrade for Foot Locker, not really interested in Foot Locker. Here's your negative article on DD, which I really need to look at again today. We'll pull up the chart here at the open and see how far it is actually dropping. But again, another negative, more negative out of China. I'm still going to stick with KWeb and Alibaba. I mean, we're basically riding those through, but DD I may have to bail on. We shall see. Okay, Vegas workers, masks back on. Again, when I was there not too long ago, what, 2, 3, 4 weeks ago, the Vegas workers had to have masks still. That went away, and it looks like they're going back on. That's fine. In California right now, it's not as bad as I thought. It's still, if you're vaccinated, you don't have to wear a mask, but I would say pretty much everybody does. So you kind of get shamed into wearing your mask, if you will. Not shamed, but you feel like you want to get along with everybody else. So most people are wearing it here. All right, let's go ahead and take a look at Yahoo. Again, you can't use FinViz that we normally look at. I said look at Yahoo. Look at Luckin. We have to use Yahoo because you can't pull it up on FinViz because it's not listed. Right, so it got delisted a while ago, so now it's over the counter, so you have to, which is what that OTC stands for right in this area, if you can see that. And those are the ones that are getting hit by these SEC amendments to restrict the trading on them. So again, 13 August, liquidation only events for not only Luckin, but there's, I don't know, I saw the chart, it was probably, I don't know, 200-300 names, maybe more. But they're all over the counter names. They're not big names out there. So anyhow, but we're starting down that road. So DD obviously is listed. So that might be the next step. I don't know. We shall see how it all plays out. When you look at this chart, though, so here you have this Chinese coffee company that was back in here, which is where I got into it before. Rode it up to the highs and then exited. I can't remember. I think 25 a share was when I finally bailed on it on the downside. Like I just can't take the pain anymore because it'd been up at 50, losing half. It's like, okay, uncle, I give up. And then it craters down to basically near zero for a long time while it goes through all of its the audits and the firing of everybody and the massive penalties, which actually weren't that massive. And then basically it's made its way all the way back. So why give up here? Just because of the trading here in the US. I still think the company is on a great path. That's why I still have some shares. We shall see though. I don't know. I have to think about how this is going to play out and then make a decision on it. But you should not be holding a ton of it here, is my opinion. So reduce whatever exposure you have. Eat the taxes if you made this 12x gain. You can hold a little bit, but if you hold it, you got to hold it through. Right? You realizing if this goes to 5, you're not selling in. Right? I didn't sell here because I know that it could go to 5, and then I'm gonna have to wait a while for it to go back to 20. Right, 20 was my original price target. It looks like it's not going to get there on my watch anyway. But great trade overall. So either don't hold any or just hold a little bit. And if you hold it, diamond hands on that because you do not want to get out of it. So that's my take. All right, let's switch over to the day trading. I want to set up and look at DD real quick and see if it's selling off. I still like the VXX long. Let's look at DIDI. All right, got to do some quick math here, maybe not so quick. So zoom out a little bit on where this thing's been. So it closed at 1150, down at 1088. Yeah, that falls into our short line. So we're going to take TX in. We're going to have two shorts up here for the market open. All right, stand by and let me get ready. Good morning, everyone. Welcome to the On Time On Target play of the day. You have the TDA ThinkPipes platform in front of you and three screens you're looking at. You have the S&P 500 here. You have Texas Instruments here on a short off of earnings, and then DD on a short off of headlines. There's the opening bell. Zooming in on DD, it's down at the 6% level, and TXN as well. I think DD is the clear short here. So again, looking for a 10-cent stop. If we can get it, high of the day is 1088. Kind of want to see it back up like TX is doing, but it could just roll off the rollover. I'm not ready to just stab in here and and take it, even though I think if you want to make your money in DD this morning, you just have to take it here blindly, because it's going to sit there and fall and not get that back up that Texas Instruments is getting. Again, would like to see DD come back up here towards this 11. That would be ideal, right? Take the 11, establish high of the day, and then come in and short it around 1090 or so. I just don't think we're going to get that point. It's just going to go into free fall here. So any backing up you're going to get here is, you could look at a delayed entry. Some traders use this. It's like, make the move, let the people, these are all traders profiting from this first move. So 1086 down to 1060, that's like a 2.5 hour move right there out of the gate. Let these people all get their money back and then turn around and take it again. So 1075 would be the high, 1065 would be your short point, expecting it to roll over and decrease from there. I don't take these entries, but it is basically a textbook second entry on a stock. Tempting to take it here. And, that would be your entry point at 1065, covering up at 1075. Just make that little mark there. Not taking it, so I won't take credit for it. But this, that would be your thought process. And then you just watch it stripe down and exit around the 1035 point. So anyhow, we'll keep that. TXN I don't like necessarily right here. Let's take a look at VXX. In the middle screen, obviously with the market going up, we need the market to actually start striping down here back to probably this level down 43.42. So nothing there. Starting to really like this entry here. All right, I'll call it 1066 short, covering at 1076 if it hits it here. Because I think when it hits it, it's just going to stripe down like 20, 30 cents. Just trying to go higher and can't, but we're not in it yet. Being patient, waiting for that 1066. It's technically a 9-cent stop. Again, 2 minutes into the day, plenty of volume. Traders basically exiting, waiting for that 1066 level to the downside, and I think it just rolls over at that point. I kind of have to stare at it since it's so close. All right, dare I look away for a second? Let's look at Luckin real quick. Yeah, Luckin's up. Okay, so if you want to exit your Luckin, you're going to get close to 15 a share. That's pretty good. All right, if it powers to a new high here, then you can't take it. So it tied it. So again, that tells you there's probably a big seller right here. You see a triple top at the 1074 level, which lets you know that 1075 is safe. You can almost go with a 5-cent stop here. Boy, that would be super aggressive. We're not going to do that. We'll use an 8-cent stop. So 1067 here to the downside. And again, if this doesn't hold, then we're not going to take it. But if this holds, use a 7-cent stop, 1068. 1068 your entry, get ready for it. It'd be a 7-cent stop. Okay, there it is, 1068. You are in. Again, this is a short. I think it's going to stripe down. So your top is right there at 1075. There's your down arrow. 7-cent stop, so 61 is your first R point. 54 is your second R point. I'm going to draw it here at 55. Again, 1068 is the entry there. That's not good that did not hold. So we may be back out of this trade in a heartbeat. So now have your parameters set up, and your exit 54 is 47, 1047 on the exit as far as your math this morning. All right. Let's look at some other stuff. We'll look again. I see the market striping down like I said it would. So VXX is going to be on the climb here. Disregard that line. So yeah, if this continues, yeah, that's going to be great for our DD short. And again, the VIX would be continue up. I wouldn't really take it here for a trade. 88, that's a 22-cent stop. You could, but I don't necessarily like it going long because I don't know that the market's going to continue to sell off. All right, so there we are. We're in this trade. Again, have 1075 sitting there, so it'll knock us off. I'm going to leave this screen for a second. As soon as I leave the screen, it's going to stripe down to the exit point down at 10, what did we say, 1047. I have it written down here, 1047. All right, so we're going to look away for a second, have that pulled up on another screen. Let's check out what's going up. TQLB is a spec name. It's up big. Same with these other spec names. Goodness, good day for spec. Zoom up 3%. Blackstone crushed earnings up 2.3%, well over $100 now a share. I remember when Blackstone was around 33 a share. Nvidia had the split, so it's going to keep going higher. It's too tough to buy here. It's too expensive. Alibaba actually up today. There you go. Roblox, Luckin Coffee in the green, Palo Alto. So a lot of names in the green. See Amazon in the green. There's our DD at 6.6% falling off. I think we needed to hit nope, it busted out, so never mind. So looked away and the trade busted. So there you have it. All right, we needed that to go to like 10% or so. Win down. Basically, Caesars missed earnings, and that was so the Win's going to sell off a little bit. But Win has earnings coming up, so we'll see how they do. But that is not a good sign. So don't expect me to stick with Win. We bought Win to get in here because the earnings were going to pop. So if that doesn't happen, then we can't stick with it. Airlines, Boeing, MSTR is the Bitcoin proxy. MicroStrategy, so Bitcoin must be down a little bit today. DraftKings had a huge update yesterday, so it's selling off a little bit. Palantir, I saw that bouncing around in there somewhere. So a lot of our favorites are down for the day. All right, let's go over to the difference between tax credits and tax deductions. I want to show you something that I think is kind of funny. So Investopedia, I'm a big fan. And so I put in, Investopedia tax credits versus deductions. Guess what it came up with? Get ready for it. Okay, so here it is. I'm like, all right, that's the kind of the standard screen there. Learn the important difference between these two ways of reducing your tax bill and how you can use every tax benefit you're eligible to take. Standard intro, right? And no article. Fantastic. So, I mean, it gives you like 1,000 articles. It's like you don't really want 1,000 articles, right? But there's no like actual article that just says, here's the difference. So you click on this guide, and at least then it breaks down over here. What are the difference? So most of the time you're getting a tax deduction. So let's talk about the definitions. Tax deduction is where it reduces your taxable income. So it's right here if you're looking for those words. Well, that didn't work. The words from Investopedia over my words, qualified expenses that can reduce your taxable income. So if you make 100 grand and you have 2,000s in deductions, then it would be as if you only made 98 grand. That's what you're going to be taxed on. So a tax. So when you think of deductions, business travel expenses, charitable deductions, student loan interest, some education stuff. So those are your standard deductions. What it doesn't talk in here is, the stuff that, home mortgage interest, if you will, used to be a big one. Now that the standard deduction is so high, it's tough for most people to trip that unless you're really living large, right? I mean, I think you probably have to get close to an $800,000 mortgage or something before you're actually going to hit those kind of limits with interest rates as low as they are. Now, if you're in an ARM or something and rates skyrocket higher, well, then that's on you for being in an ARM. Then maybe you can pay a lot more interest and pay that. But those are deductions. Again, it's going to reduce your overall taxes. So think if you're in the 20% tax bracket and you make $100,000, well, you would owe $20,000 in taxes. That makes sense. Now, a deduction takes that $100,000, drops it down. Say if you take the standard deduction for married, filing jointly, it's $24,000 total. So that would drop that down to $76,000 of taxable income. And then you would be taxed on 20% of that. So right around $15,200 is what you would owe in taxes. Now, start back with a tax credit is you're at $100,000 and say you're in the 20% tax bracket. Then your taxes would be, say, $20,000. A tax credit reduces the total amount of taxes that you owe. Okay. So if you owe 20,000 taxes and you have 2,000 tax credit, and then it comes right off the top. Earned income tax credit, generally my audience is not really in this level or at the the demographic that this generally applies to. So we won't talk about that. Child independent care credit, yes. Additional tax credit, maybe, depending on your income. A lot of these have income limits where they phase out if you make too much, for all the right reasons. That makes sense. Lifetime learning credit, though, is interesting because between the LLC and the AOTC, if you're going to school, I don't care your age, your income, there's generally a tax credit that applies to you. So you definitely want to, make sure you take advantage of that and know about it. And generally TurboTax will ask you like that one question. It's like, hey, do you have anybody go to school this year? And if you click no on that, well, you're not going to get your tax credit. But a lot of things do qualify there. All right. Bottom line, you can do your own taxes if you want to fight through the tax law. But again, a CPA, I would say once your net worth gets around $1 million or so, or your tax situation gets a little more complex than using a CPA, it's probably pretty smart. Again, it's kind of like anything else, like airline pilots, you overpay them most of the time, right? Because they don't have to do anything, but they're worth their weight in gold the one time they have to take some action, right? So I'd treat CPAs kind of the same way, kind of price of doing business. Have them keep everything straight for you. So you're really kind of overpaying them most of the time, but the one time they catch the one thing and save you thousands of dollars, then you're underpaying them, right? Because, it's not like they charge you for all the money they save you, right? So same sort of mentality. So consider, if you will. All right, that's all I've got for you today. Thank you so much. And Luckin Coffee, if you either don't hold any of it or just, keep a little bit and plan to hold that through. So, all right, you have a good one. We'll talk to you tomorrow.